traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. We're going to take a look at the NASDAQ. I posted the earlier chart showing the daily making a 61% retracement off of the previous high that we made back. That was a huge move, folks. But what I wanted to show you is what was happening last night at 4 o'clock in the morning, New York time. I happened to hear my beeper go off at 2 in the morning, and I happened to say, well, this is what we had said in the videos that we sent out about 5 hours earlier, around 8:30 New York time. We sent out videos on the S&P and the New York and the Dow Jones Industrial Average, not the NASDAQ, but they all did the same thing. I'll show you the results here. But that's where this 382 was hit, right there exactly at 4 o'clock in the morning. Now, I want to show you what happened after that, because you already know, but I think you get a pretty good idea of what was really going on here. This shows you how pattern recognition works, and especially these numbers that we talk about, of which the 382 is very important in strong trending markets. And as you can see, there was a very strong trending market the last part of the day yesterday. Last night we rallied right up to the 382, and then we came down. We've come off the bottom of the page, folks. We actually completed that AB equals CD pattern down there, and we're having had a little bit of a bounce from that level. But that's not all. But let me just show you how sometimes if you just get ready for it, you're going to see something that I do this every day, and sometimes it looks better than other times, but by golly, when you watch it, it's just really amazing. Now, one that we've been bearish on and been waiting for a really clear pattern, and this was an hourly chart, folks, last night. This was an easy one because we were able to do this long before it happened. I didn't do it on a shorter time frame because it goes off the bottom of the page, but there was your perfect 382 retracement. You have an AB equals CD pattern exactly at the 382, and you can see this is a huge move to the downside. Now, it missed this 382 by about $10, but by golly, it certainly got that one, and that's the one that counts. And look, folks, that took about 12 hours to complete. So very, very interesting. Maybe this stuff has some applications in trading. We'll have to wait and see. Let's just take another one that's interesting. Let's take a look at the euro. There were so many of them last night you couldn't keep track of them, actually. Here's the euro. Same thing. This is one of the reasons why when the euro goes down, that means the dollar goes up, and that means the gold goes down. But there was your 382 retracement in the euro last night, folks. Absolutely spot on, and boom, down she came, and it's still going down. Now, let's do a few others. I'm trying to build your appetite for what this stuff really is. Now, let's say that you missed the first 382 retracement in the Dow Jones and the others, okay? Now, these are all the same. I'm going to give you the numbers. You can check them yourself, but here is the Dow Jones Industrial Average. This was after the report, okay? The report came out, and you'll notice that we got a 150-point rally in the Dow Jones, and look where it stopped, exactly at the 382 of the high that we made yesterday. So, my goodness, that's a really good affirmation that maybe these 382s work. On the day trading thing we're going to do tomorrow, you'll get about 100 charts showing you the 382 in all various markets. Does it work all the time? Heavens no. But you know what else, boys and girls? Nothing works all the time. And let me show you one of them that doesn't work all the time. And it is an absolute perfect setup. And that's why you have to use stops in these markets. And this one here is the Japanese yen versus the US dollar. As you can see here, the dollar and yen was setting right at a perfect ABCD. Okay, right there. The stop had to be right above here. So that was risking 25 pips or around $200. And of course, when the report came out, it exploded and went all the way up to the top. And that's why when this fails, and look, the perfect harmony here. This is absolute AB equals CD in both price and time. In other words, a number of bars here, number of bars here, set up perfectly. But once it pops above it, look out. Those are the ones that get you into big trouble if you do those. Now, I want to give you one other, well, I did do crude oil too, because crude oil has been an absolute beauty for us. It's had some tremendous moves. This would be a really good idea to take a look at this, because this shows you when these patterns fail that they give you a really good application here. Now, this is the crude oil from yesterday, okay? And here's where it was last night. And I marked this last night. That came in at 79.80. And I said, there's your 382 at 79.80. You know, this one worked perfectly. It had a perfect ABCD. This one was a little bit differently because the pattern that we had here was a 135 pattern. I'll show it to you in just a second. And we said if it gets below here, most probably what will happen is the market will come back and make a 382 retracement, just like all the other markets did. Every single one of them. There's some type of a vibration in there, folks, that makes this thing work better than ever. So if you look at this crude oil, you're going to see it real easy, because I couldn't do them all. I mean, I did some pretty, I'm not complaining. Anyway, here is the thing that we're looking at here. You can see the 135 pattern. Okay, there's the 135 coming in right here. Okay, you basically have a double top. Then you have the 135 pattern right here, 1, 3, and 5. And you see it comes in right at the 61% retracement of this move. Okay, then after it breaks down to this level, it gives you one more chance at a 382 right here. And then boom, and it kept going lower and lower and lower. So anyway, that's just showing you how these patterns work. Do they work all the time? No, but it's all about risk control, and that's what you really, really want to focus on. Our guest at the break is going to be Jeff Huge of Alpha Insights. He always has some really good stuff to talk about and to show and everything. So we'll have a lot of fun, working with what he's looking at too. Now, we're going to come back here after the break, and I want to show you something that we've been planning on doing. Oh, let me get this I think I get that last crude oil. No, I already did that one. To see how it's going to work. Okay, move on here. Someone asked a question about the gold market. Folks, we're still looking for gold to get down quite a bit lower. We thought that it would make on that beautiful pattern that we had there. It had $11 profit in it, but then we bought it at the 382 at 18.43, and we had a $4 stop at 18.39. We still netted $12. We made $800 on the two trades. But it continued to go down lower and lower. But by then we were in other things, so it couldn't really, you couldn't get it. You just can't do them all at once. That's all there is to it. So anyway, that's what we're watching here today. And when we get back from this break here that we're going to have, I want to chat with you a little bit about one of the things we're going to be watching very closely over the next few days, okay? 877-927-6648. Oh boy, this can't happen.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, once in a while, you see a market that encompasses everything that you believe in and teach. This happens to be the wheat market, folks. We talked about this 3 weeks ago, 2 weeks ago, last week and this week, and we said to watch for March the 7th, March the 8th. March the 8th, of course, is the full moon. It starts today, goes into Thursday, but this is the day we hit the price objective they were looking for. As you can see, it came in right on near the low of the day. But the thing that's really important, and that's what I really want to try to explain to people, is that when you're a technician, you have to isolate yourself from the BS that they try to feed you, much like if you're watching Fox, CNN, CNBC, they're all the same. They really are. So, by golly, what you got to do is figure out how to figure this stuff out, especially with prices. Let's go back to June, folks. Do you know what the price of wheat was back in June? It was just shy of $13 a bushel, okay? We hit under $7 a bushel today, folks. That's that's a lot of, that's about a 54% retracement. And yet, nobody wants to buy wheat now. Now, wheat is one of the staples of our diet, folks. That's bread, biscuits, pasta, all that stuff. Flour. Hello, operator. This is not going to go away. But you know what they've been saying now, and folks, do you remember when it was limit up back in June, making that 3 drive to a top pattern? You couldn't get anybody to sell it. You couldn't, and probably smart people probably didn't sell it. But by golly, look what happened. But it made 382 retracements all the way down. What I'm going to do is I've built a PowerPoint presentation. Well, actually, I built a PowerPoint presentation on the stock index to show you the same similarities. But this one here basically shows everything that we talk about: cycles, repetition, Gartleys, butterflies, 382s, how to count times up, how to count times down, which was Gann square of 9. How do you square a circle, that kind of stuff. And what we try to do is to get to a point where we can say, yes, this is where the pattern completes. Now, like with the Japanese yen today, sometimes they just don't work. And that's why you put your stop in. And if you lose, you move on to the next. Like my grandma said, always take 2 quarters with you when you go to school, because if you don't find a pretty girl on the first bus, you'll probably find a pretty girl on the second bus. So that's it. Now I want to give me just a few minutes here, because something very, very important is happening in these markets, folks. I mean, it is so important that I just can't tell you how important it is. I'm going to bring it up here because if this happens, it's going to surprise a lot of people, and it isn't going to surprise us, because we say if it happens, we're going to be ready for it. And let's take a look at it. This is where we were last Thursday. We had a double confirmation of a 382 of the low from way back here in October. It was a 61% retracement of the low in December. This was to the exact tick. We rallied up to a 50% retracement of this move right here in 3 days, Thursday, Friday, yesterday. And of course, we sold off and then continued to sell off today with the bad news. The bad news is, folks, if we go below 39.25, we're about 80 handles from that right now. But remember, we gave up 100 handles in a little over an hour and a half today. So if this thing starts to fail, ooh, it is so bearish. It's going to be as bearish as this one right here. That's how bearish it's going to be. So if we get below that, then do I think it's going to happen? No, I think that we still got a chance to get some support here around 39.80, 39.80 to 30, any below 39.60. They're going to turn the lights out, I'm afraid. So just be aware of those numbers, folks, because if we go below that, this is going to be it's going to be bad. Well, it's not going to be bad all the way down. There's going to be rallies, but you got to be prepared for that. So that's it. I said in the video last night that there was a 382 retracement at 40.24, and I said it's got to hold 40.24. It did for a period of about 5 minutes, and from 40.24 it went all the way down to 40. Oh, gee, I forget what the number was. It was 40.06 or something like that, and then rallied back. And the rally back, folks, just like in the Dow Jones, and just like in the NASDAQ, the 382 back from that rally early in the morning came in at 40.32. The high was 40.39, and then down she went. And it's had a pretty big move to the downside. Right now, I don't know where it's trading right now, but, well, it's right on its low, so that's not a good sign. So let's keep that in mind as we look at some of these things here today. We've got the Dow down 500 right now. S&P's down 42. NASDAQ's down, 100 points in the NASDAQ. That's a considerable amount, 19 points in that. We've got gold down $35, silver down $1. So they're beating everything up with the exception of wheat and corn. Those are the only ones that are on the green side, with the exception of bonds. Bonds have continued to move higher, and we know the number in bonds. If we get below 123 on bonds, because we went from 123 and change to 125, we rallied $2,000, and we made a 382 retracement last night in the bonds too at 124.22. So that's it. We got to pay close attention to that. Now, someone's asked a question about the Chinese government. I want to bring this chart up because this is a weekly chart of the FXI, which is the ETF for the Chinese market. And as you can see here, we did make a 382 retracement here, folks. Now, this is a weekly, so that took 3 months to form. We went right up to it. Came within, I think, 5 points of hitting the exact number, and now we backed off. The market's just chopping around in here right now. But if we get below this level right here, and who could that be? I bet you it's the Republican National. I don't know who that is. It was a spam call. I can't do anything about that. We do everything off cell phones now, and that's our landline, which is not very what do you call it, accurate, or it doesn't screen the calls like we'd like to see. So anyway, just remember, folks, going below that 39.23 in the S&P, you do not want to be long stocks. I can tell you thousands, well, not thousands, maybe 3 examples, a lot of examples of how it works. So let's remind ourselves of that. And I still think that we're going to get a pretty good chance to buy gold down in that area that we're still hoping to buy, which is down really close to 1742 to 1776, and we're not very far away now with that $35 drop that we've going on today. By the way, Al said that there are a few lines open, so if you have any questions, 877-927-6648. And remember, in another 3 minutes and 30 seconds, we're going to have Jeff Hughes on. Jeff has been bearish for quite a while. He had that 2-day rally, but the market has reinstated his bearish position. And so we're going to be talking to Jeff Hughes at the break. So stay with us, 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. I believe we have Jeff Hughes of Alpha Insights on the line today. Jeff, how are you doing?
I'm doing great, Larry. How are you?
Just loving this volatility. It gets made like Christmas Day sometimes. Hey, tell us what your first chart is about the 10-year Treasury yield, and boy, it has broken a long-term trend line, hasn't it?
Well, I think anybody who was paying attention to what Chairman Powell had to say today has realized that rates are going significantly higher than most people expect. And, you know, if we get upwards of, say, a 5 3/4 to 6% Fed funds rate, it's highly doubtful to me that the 10-year Treasury yield is going to hold below its recent highs of 4.33. And we're just using simple technical analysis to break out above that 4.33 would project another 100 basis points higher to 533, and that hits kind of square in the middle of the range of around 5.25 to 5.5, where the next big resistance comes into play. And so it's our bet at this point that rates are in the process of moving higher on the long end of the curve. And, let's face it, if you can get 5, and a third, you're picking up about half of what the stock market's long-term average annual return is on a risk-free basis for the next 10 years. I think that's an alternative that a lot of investors are going to be able to stomach, and I think we're going to see a dramatic asset allocation shift toward long-term Treasury bonds once we see that 5 handle.
Well, I can remember going back in the 70s what it was like. Jeff, is there a way to equate a 5% Treasury yield to the mortgage? Is it like 2 points above, like 7%, 8%?
That's about right. Anywhere between 2 and 3, depending on your credit rating.
Okay, I was curious because I'm a technician. I don't even trade. I trade the bonds, of course, but the rest of that stuff, means nothing to me. Now you've got this next chart that I've never seen one like this before. This is your leading indicators. Is that what you're referring to here?
Yeah, this is produced by the Conference Board, and it's available for free to anybody who wants to go to conference.board.com. And what the leading economic indicators are is they're the top 10 most fungible sort of pieces of data that the Conference Board manages that created an index out of it. It dates all the way back to the 60s. We're showing the last 20 years here. And anytime this index is broken below 0, it's preceded a recession. But normally you get a very strong recession signal when you break below -4%. And we've been below that level for about 5 months now. Now, the January data actually hooked up a little bit, but what we're seeing so far in February suggests that it's going to hook right back down. And, as long as we're below that 4%, the forward forecast is 6 months. So within the, forward 6 months from the time it goes below that, that would put us at about April. So we're almost there. We're a month out before we should start seeing significant data points that support the notion of a recession.
Well, this next one actually scares me a bit. Well, they all scare me, but this one is going to be interesting because this shows the something different than what we're looking at here in Arizona. We haven't had a price collapse like this compared to some of these other cities. No, it's not a price collapse.
It's actually not a price collapse. This is actually the decline in existing single-family home sales divided by the number of households. Okay, so what we're seeing is that sales of houses have collapsed, and they've collapsed at the fastest rate in history, going back to really 1973 when the data began. What's interesting is that prices continue to fall typically for about 18 months before they bottom, or I should say sales before the housing market bottoms. But in this particular case, I would be leery whether that actually is the bottom, because prices are at all-time record highs if you look at the affordability index, which is an income-to-price ratio. And it's actually higher today than it was at the peak of the housing bubble in the mid-2000s.
Jeff, is there a index like equates rentals to home ownership to show the difference between how many people are renting versus people that are buying? Because mortgage rates at 7-8%, that takes a lot of people right out of the market, because going from 3% to 8%, that's a big hit to your mortgage payment.
Yeah, there is an index. It's produced by the government. It's a per capita home ownership index. I don't know the exact details of it off the top of my head, but I think it's about 61% last time I looked of number of households that own versus rent.
Okay, the next one is really interesting because I have a couple of people, very, very close friends, that are in the automobile business. They sell the expensive exotic cars, Lamborghinis, Bentleys, and Rolls Royces, and their business is still going through the roof. But they tell me that their friends that are selling Hondas, Chevys, and even Lexus is the business. Not Lexus, but what's the other one? Tesla. he said those sales have dropped off considerably because of the fact that loan rates have gone up so much, and the price of used cars have dropped quite a bit from what he told me.
Yeah, the luxury market has been fantastically stable, historically speaking, throughout recessions. And you can take one look at what countries are making new all-time highs. France, for example, the CAC 40, made a new all-time record high. Now, the largest market cap company in France is Louis Vuitton. And Louis Vuitton sells very, very expensive handbags to the rich and famous, right? And
That's right.
That business is very, very strong. And so, luxury should continue to go up. What this is illustrating at this point is that auto loan delinquencies are starting to spike, and it's typically the subprime loans. And, people think of, when they think of subprime, they think of subprime mortgages, right? Well, that whole market has moved to the auto industry. And so, people with 300 credit ratings are buying cars on credit. They're not making their payments. There's about a 23%, of those loans are now delinquent by at least 30 days, and some in more than 90 days. But the most important thing is on the left-hand side of this, you can see that the big spike up in delinquencies is approaching the levels that were seen during the Great Financial Crisis, up around 10%. We're about 9.25%, 9.5% right now. So not far to get there. And that is a leading indicator of consumer stress, stress in the financial markets. And so, we hear all this, how the consumer's in great shape, and there's a lot of, pent-up savings. Well, all that, those trillions of dollars are not in the hands of the average American. They're in the hands of those who have money and have been moving it to the sidelines. So, I would not be at all, supportive of that notion that the consumer's in good shape. This is in stark contrast.
Well, the average car loan, car payment is $870 a month. That's $10,000 a year, now. For God's sake.
The average term 7 years. When I bought my first car, it was a 3-year loan.
My first car was a 1949 Mercury, and I paid $150 for it, and I drove it for 30,000 miles. Then I think I changed the oil for the first time. No, I didn't do that. But when we were kids, on the weekend, my buddies, they'd pull an engine and just take it apart just for fun. I mean, of course, the engines are a little bit differently now. But, okay, the next one here is your ISM manufacturing. This is some fundamental. Hey, we got to take a break, Jeff. Can you stay with us for just a second?
Yes.
Yes, a couple minutes here, folks. Jeff Huge, Alpha Insights. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Jeff Huge of Alpha Insights, and we're in my favorite segment, Elliott Wave Analysis. And you've been doing really good with this Elliott Wave stuff, so tell us what you're looking at right now. I can see the chart on the right does not look very healthy.
No, neither one of them do, honestly. And this is really the same chart, but the first one on the left-hand side is a 13-year monthly view that goes back to 2009. And all we're really saying here is that, you know, the advance off that 2009 low counts as complete 5 waves up to terminate primary wave 5, cycle wave 5, and potentially super cycle wave 3, which is a theory that we've been playing with. We don't know for certain at this point, but if we're right about that, then we've got a lot of work to go ahead of us. And, you know, what we're seeing right now is so far the market is held above its 200-week moving average. But if we move to the right of this chart and look at things on a primary degree basis, this is a weekly chart that dates back just 3 years. This goes to about the March 2020 low and counts the advance from March 2020 to January 2022 as the end of primary wave 5, cycle wave 5, and we can see the details of the decline. We declined in 5 waves into the June 17th low, which we count as primary wave 1 down, and we rallied in 3 waves into the August 16th high, which we count as primary wave 2 up. That stopped at the 75-week moving average, and that moving average is actually equivalent to 377 days, which is a Fibonacci number. And from that time, what we saw was a sell-off that occurred again in 5 waves, and that ended on October 13th. We believe that that initial decline was intermediate wave 1 of primary wave 3, and that everything that's occurred since October is a counter-trend advance, and we can see a very clear 3 waves, A, B, C, to end what we believe was intermediate wave 2, and that ended on February 2nd. Since that time, we've been declining pretty steadily here, but not fast enough. You know, the bulls have kind of held their ground here a little bit. And what we really need to see is a breakdown here below that 3,800 level, give or take, to confirm that this is where we are in the process. And once we get that, we should see a fairly epic decline, Larry, that could carry the market down well past the 3,000 level.
Yes, I certainly see that. This next chart, I think, is an up-to-date, shorter-term view of the market. And that's one I follow, of course, because I'm interested in, how to get in without risking too much. But this is a really interesting Elliott chart, because with this little 3-day rally that we had and then reversing all of it, I mean, I just noticed my beeper just went off that we just made new lows, almost 60 points down. in the
That's
S&P, and so this we start getting below those lows we made last Thursday, and oh dear, that's not a good sign, Jeff.
No, I printed this chart like an hour and a half ago, and we're now 20 S&P handles below where it was when I printed the chart out. But, what we're looking at is everything since August 16th, that primary wave too high. And we can see the details of the decline, a clear 5-wave decline into that October 13th low is intermediate wave 1. And then we broke the downtrend, and we can see, the 1, 2, 3, 4, 5 wave A that ended December 1st, the ABC corrective wave that ended December 22nd. And we see another trend line coming up there, right? And then we can count from there another 5 waves, 1, 2, 3, 4, 5, and minor wave C of intermediate wave 2, and that occurred on February 2nd. Since that time, we can count 5 waves down again into minor wave 1 down, which broke that advancing trend line, right? And now we've seen a 3-day rally off last Thursday's intraday low, and that rallied up, and we saw a shooting star candle, that long shadow on the top, and almost like a gravestone doji, which indicates the end, right? And so that's the end of minor wave 2. If we're right about that, and this decline carries below the minor wave 1 low, this is the beginning of a 3rd wave decline at 3 degrees of trend: minor degree, intermediate degree, and primary degree. That will be an epic decline that could carry all the way down into, say, the 2750, possibly as low as 2400 before wave 3 ends. We still have wave 4 and wave 5 to go. We don't think the entire structure will end until the S&P gets down to around 2250 or so. That would equate to about the 61.8% retracement of the entire 13-year advance off the 2009 lows, and that also comes into a close vicinity of the 200-month moving average, which is advancing pretty steadily still, and also a prior 4th wave extreme, which was that March 2020 low. So right when you get into that area, that's where we should expect pretty good support before we see what I would describe and define as a durable counter-trend advance that could, retrace something like, 50 to 1/3 to 2/3 of the entire decline, something that's very tradable.
Wow. Okay, tell us about your monthly newsletter. I mean, some of the folks are new, and so they'd like to hear what you offer, and it's a great letter, by the way, and I love your cartoons. They're really spot on. Where do you get those?
These are borrowed from the guys at Hedgeye, and Bob Rich does a great job kind of illustrating what's really going on out there, and we kind of wrote about it this way, citing the fact that we think the bull case is hanging by a thread, and the bears are there with scissors, right? We publish the newsletter on the first Saturday of every month. It's a detailed overview of economic factors and market factors that we think are really driving the changes in price. And we publish this on Substack, and so you can access it by going to hugeinsights.substack.com. If you can't remember that, then you can go to @alpha_insights on Twitter, and it'll be the first thing that you'll see. It's pinned to my Twitter handle. But, we provide this as kind of a free service, or we have for a long time, but now we're charging for it, just $10 a month. You get a nice preview. If you don't want to pay, you can see maybe the first 3 or 4 or 5 pages of it. But it's a 12 to 15-page newsletter that has lots and lots of detail in it, and it's worth $10 a month. Trust me on that. We also provide some pretty good perks for the people that are willing to subscribe and pay. We give you our top actionable trade idea every Wednesday. We're also adding updated market analysis in that Wednesday note as well. And then, we'll do periodic interim bulletins that we'll send out to everybody. And also we do a quarterly video. And so, it's a lot of content for $10 a month. I'd encourage people to give it a shot. Just give it a try, decide if you like it. If you don't, cancel anytime, no questions asked. But, it's a great deal. We've actually even offered a lifetime membership at the request of one client. And so, if you so
was
desire,
that his
if
life
you
or
think
yours?
Exactly. It's the life of the publication, put it that way. But I plan to be doing this for a long time.
Good. Listen, I posted your contact information here, so thanks for joining us, my friend. And we'll see you again soon. Stay safe and stay above ground.
Always a pleasure. You too. Take care, Larry.
Jeff.
Bye-bye.
Thank you so much, folks. Jeff Huge, folks, Alpha Inside, a really stand-up guy that knows what he's talking about. All right, we'll be right back, folks. We'll wrap up 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted the chart of the action today in the NASDAQ. You'll see around 4 o'clock in the morning, New York time, we hit an exact 382 retracement. We've now completed the ABCD, and of course we had the first rally back to the 382. Now we're making new lows. That means we have more to go to the downside. As Jeff Huge was just talking about, should we take out the lows of last Thursday at 39.23? Folks, that is about as bearish thing as you could possibly have happen. That means it's high translation. In other words, the market rallied 3 days, then gave it all back. Oh my goodness. That's what gets people in trouble, is they don't realize the importance of that if it does happen. It's going to be tradable all the way down. It's going to have rallies all the way through there, so we're watching for those. And of course, in real strong trending markets, we know that 382 is going to be your friend, and we're going to be teaching that tomorrow, an all-day session from 9 until 2. I hope you can join me. I really enjoy it. It's one of the fun things I do. I have to slow down in the morning because I got to keep my voice nice and strong. But we go straight through 5 hours, take a little break here and there for a drink of water, and just keep going. It's fun. A lot of questions, and we get a lot of good responses from it. And the good part is the people there are telling me which trades to look for. And if you think that doesn't make me happy, it really does. Like, take a look at the euro or take a look at the crude oil, and you can see the pattern that we describe in our methodology, and there it is right there. And sometimes they work, sometimes they don't. But by golly, they work more than they fail, and they make a lot more than when they do fail. And that's the whole key to making money. So hope you can join me tomorrow. There'll be no radio show tomorrow because I'll be doing the day trading class, and there'll be no show on Friday. I've got to do something on Friday, so that'll be a little bit of a break for it. But we'll do Thursday show for sure. We'll be right back tomorrow. Not tomorrow, but Thursday.
Building wealth